trading at its best.
I'm Mike Swanson. I've been trading the markets for about 10 years. It's about 9.5 years, just about 10 years. Okay, so, and this has been full-time. I've not, I haven't had another job during that time. It's been, in the beginning, putting in 18 hours a day learning the markets. And so I've taught myself different programming languages. I've built robots. I've built indicators, strategies, software. I've day traded, swing traded. I've done it all. Okay, so I've got all kinds of stuff to teach you guys. Hopefully you've had a chance to visit the blog at TradeWestForex.com/blog. We've got all kinds of training material there that you can go over. A lot of good stuff. We've had plenty of positive comments from traders that have gone out and have had success with just these basic trainings we've been doing. Okay, so let's go ahead and talk about today's training. Okay, today we're going to be talking about how to trade Bollinger Bands. Usually I'm not a fan of a lot of indicators and things, but I'll explain why Bollinger Bands is one of the indicators that that makes sense. It's, whenever I'm trading anything, I like to understand the fundamentals behind it, what makes it work. So I'm going to explain that to you today, how and why it works, and the settings that you should use. So I'll show you the settings, and as well as the trading setups on the charts. That's where we're going to spend most of our time on the training here. Okay, so first off, why do Bollinger Bands work, and how are they formed? What are they based on? Well, they're based on a statistic called standard deviation. So if you're not familiar with that, it basically finds where the price has been averaging, and then it adds this range to the top and the bottom, which tells us there's a very small chance that the price should go outside of those levels, depending on what your settings are at. And that's important because it tells us when there's volatility. If the price exceeds this standard deviation level, we know there's a pretty extreme amount of volatility. And if we're trend or breakout trading, that's the exact times that those trends develop. Those big breakouts take off, all because of high volatility. That's kind of the building block for a successful trend, is you've got to have that initial volatility to get it going, to kind of get the wheels turning. So that's the basics of how they work. I mean, there's a lot of confusing things I could get into, but I want to keep this training as simple as possible and let the charts kind of explain it. So we're going to get right to that. First off, let's just talk about settings for the indicator. Now this is pretty straightforward. We're just going to use the default settings that most platforms use, is a setting of 20 for the period, 2 for deviations, and we're going to put it on the close of the bars. And the close is important because even when we're analyzing the charts, we're not going to pay attention to the high or any of the other parts. We're going to pay attention to the close, because that's what the indicator is based on. A lot of people make that mistake where they set an indicator to the high or the low or the close, but then they are not using the right component of the price. Okay, so the reason we're using the 2 deviations is because this will mean that 95% of the close prices will stay within the bands. Okay, the statistic, for each number you increment this, for each deviation, this number changes. With 2, at 95%, that tells us that only 5% of the time when the price gets outside of those bands, that's pretty rare, which means there's something significant happening in the markets, which is volatility. Okay, so let's jump right into some trade examples and kind of put this all together and show you actual trading setups. So let's bring this chart over here. Okay, so if you're using MetaTrader or whatever platform it is, you're just going to go into your indicator list, and it might be called bands or Bollinger Bands or BB, depending on what platform you're using. You just double click on that, bring it onto your chart, and there's your settings. 20 for the period, 2 for the deviations, apply to close. If your defaults are different for your broker, just change them to these settings. Okay, we're going to leave everything else the same. Okay. What I've also done here is I've applied the 200 EMA. As you've probably seen in all of the trainings, I've suggested using this moving average for a trend direction. So that way you stay on the right side of the big moves. As you can see, if we zoomed out here, staying long above that 200 EMA would have kept you on the right side of the market the majority of the time here. Most of the big moves up, as you can tell, were to the upside. There was a couple retracements, but if you just stayed long, you should have done really well. And all I'm doing here is setting that to 200 exponential close on the moving average. Okay, so let's take a look at the Bollinger Bands and explain what's happening here. So the way that these work, like I said, they are based on deviation, but what it's doing is taking a deviation of the moving average. So we set that to 20 periods, so we've got a 20-period moving average here, and then what it's doing is shifting it 2 deviations up and down, which tells us statistically that 95% of the close prices will stay within these bands. So that's the technicals of how these are formed. Now, what this means, the way we want to use this is anytime price closes outside of these bands, we know there's an extreme amount of volatility, and if that happens during a breakout or a support level break or resistance break, we can, that basically gives us more confirmation that the breakout or trend is going to continue. Okay, so let's look at a few trading examples here. I'm just going to close that so we have more room here. We can see the entire chart. We'll zoom in a little bit and we'll go over some examples. Okay, let's just start. I'm going to do what we always do here is we scroll back and then we're going to kind of walk it forward with the F12 key. And we've got our auto scroll turned off. Okay, so here you would be looking at your charts as if this was today and you've got a signal. By the way, I'm on the daily chart here. I'm on the Euro Australia. It's a pretty good trending pair. And this can work really on any time frame, but as you know, I prefer the daily time frame just because then I don't have to babysit the charts and I can basically check in just once a day and take my trades literally in 10 or 15 minutes a day. Okay, so here I'd be looking at this day, the bar closed outside the bands. What am I going to do? Really simple. Okay, if I'm already long, this is confirmation that maybe add to my position. Need to clean up all these arrows off this chart here. Anyway, I probably don't have to clean those, but anyways, if it goes above that Bollinger Band, it has to close above. That tells us there's a lot of volatility in the markets, and so if the trend is up, like we see here above the 200, we can go long. Okay, so this is an example of a trend continuation. You can see even in the past, several times when it exceeded that Bollinger Band, the market continued up. Okay, now let's look at the very beginning. When it's first starting a trend or the breakout, if you are looking at just this basic support level here, you'll see right at that 200 EMA, if you're looking for a breakout, this would be a great confirmation, is looking for it to break that Bollinger Band and close above. Okay, so let's see what happens. Right here, it breaks out and closes above that Bollinger Band. So what are you going to do? You're going to buy right there. You've got a signal to buy. Maybe you've got your other strategies telling you to buy as well, and this is just confirmation. But you've got a signal that this is a lot of volatility caused this breakout, so it should be a pretty solid breakout. Now we look and watch what happens. And that was the beginning of the trend. Just the second day alone of that move moved the market up almost 100 pips. Okay, then it kind of tested sideways for a bit, consolidated, and then it shot up to the Bollinger Band again. Didn't close outside. Here we closed outside again. So if we were already long, we might add to our position here. Scale in. You can go back on the blog and review the scaling in strategy that I've taught to see how to do this, how you can scale into trades and kind of better manage your risk through scaling in and scaling out. Okay, so you've entered again, and then again that second day, moves the market up almost 100 pips, and then it just continues straight up. And here you're right in the middle of a great trend that's developed from a very basic standard deviation approach. So you can see there's plenty of closes. Every time it closed, we got another push up. Here again, closed outside, another nice 130 pip push up. For several days, it just went straight up. Okay, pretty straightforward, really easy. If we're above the 200, if we're breaking resistance, that's a signal. And then as it continues to break, that's a signal to add to your position. Eventually, it will end, and that's when you're starting to scale out and exit, and it will finally turn the other direction. Okay, which right here we started to get almost a close outside the bottom. Here was another close outside the top. It's really testing now after this big move up. So this is probably the end of that move. Okay, so there's your example for how to use it to the upside for longs. Let's see if we can scroll back and show you for shorts how this would work. Okay, we'll just go somewhere in here and let's clear that drawings off. Okay, so this one, the market got pushing down below the 200. It almost closed outside, not quite though. Let's keep pushing it along here. Okay, right there. There you get your first close outside the Bollinger Band. It was really pushing hard. There's a lot of momentum and volatility from exceeding that Bollinger Band, so you have a signal to go short. Now, personally, I would like to see this begin with a breakout like it started here. This one was really close, so I mean, you may have been able to take that. It doesn't have to be perfect. I mean, if it comes within a few pips of closing, you know, you can probably jump on it. But I like to use that as the initial entry, and then these continued breakouts or continued trend development where it goes outside later on here. That would be good for scaling in. So as you can see, that gave a really strong move over the next several days, and it just continued to push outside. So that's the short side. Pretty straightforward, really easy to use. Hopefully you guys can practice this. As with all of my strategies, you can turn off auto scroll on your charts, scroll back in time, and then walk it forward with the F12 key on MetaTrader. Walk it forward. If you're below that 200 and it goes outside the Bollinger Band, to the downside, you go short. Okay, so even that first bar, it was right on top of it. So that could have been your signal to get in short. If you got in late, it still worked out. This was a nice 350 pip move. Even if you got in way down here, gave you 125 pips. So hope you enjoyed that little basic strategy. Really easy to use. The fundamentals behind it make sense statistically. When it pushes hard like this throughout outside these bands, you know, we're not worried about the whole lagging concept. This is statistics telling us there's volatility. Maybe we're not going to use this exclusively, but it's definitely a very good confirmation. And if you apply just a few of the basic strategies I've taught you guys over the past couple weeks on the blog, then you can have a pretty solid strategy.